Hi everybody, it's Mark here at Teslary, and Tesla didn't do so great today. The overall market didn't do so great, but the closing price was $258.87. That's a $4.12 drop from yesterday, or just over 1.5%. And as you can see with this blue line in the after hours is not being so kind to Tesla, almost down $2 a share. And it's currently around, it's about 20 minutes before the close of after hours trading. So that's unfortunate. And the question is why? I mean, we all know that CPI ran really hot, and we can actually look at that first. Let's get the news out of the way. So looking at CNBC, you can see that the expectation was around 3.6, and it was above expectation, and that was the headline number. Also, the core, that was also higher than expectations in the month-to-month and the year-on-year. Nothing looked good in CPI, with the biggest contributing factor being shelter. Now, shelter is something we talk about a lot, something that, we can't... The thing about shelter is, if rates remain high, and they're still high, obviously, even after, they're much higher after today, but if rates remain high, and let's say you have a house, well, you don't want to sell your house. Even if you need to, you're going to wait as long as you can. For what reason? What reason alone is, with mortgage rates being like 8%, it's the highest in over a decade. But with mortgage rates over 8%, you know that the buying power of a potential customer, of someone that would buy your house, would be much more contracted because of the interest they would be paying if they're mortgaging your house. So they know that if rates will come down, they can actually probably get more money for their house. And people are doing everything they can not to move. So thus this whole idea that people were having, 1.5, 2 years ago, that the housing market would crash. Well, the housing market isn't crashing because no one wants to sell. The only people selling, and there's people obviously selling at losses if they bought recently, but people who are selling, they don't have any motivation to do it right now. And if they do it right now, they know they're going to lose a lot of money, or that if you were locked into a very low mortgage rate, the vast majority of people who own homes are less than 4% on their mortgage interest. So if they were to move out of their house, where would they live? Rent is not necessarily cheap. We see rent, though rent comes down every month over the last couple reports, it's still very expensive all over the country. I know there's a lot of multifamily dwellings being built, but it's not like they're all completed. And at the same time, we've seen there was actually a contraction in about the number of permits being issued for multifamily residences over the last couple months as well. So we know that construction is slowing down. We know that people don't want to move out of their house because either that they don't want to take a hit on the value of their home, want to get the most money they can, or they're locked into a low interest rate and a current mortgage, and moving out and buying a new home might put them in a bind if they're paying over double the interest rate. And people can say all the time, well, you can always refinance. But if you listen to the Fed, the rate's going to be high for years. And something to think about, right? But we talked about shelter being the number one contributor to this month's report. But Carl Quintanilla from CNBC, our very fun Tesla bear guy, well, he also he noted something very interesting. And it's that the biggest contributor, so if shelter was the biggest contributor to the CPI increase, what was the biggest contributor within the shelter? Well, breaking down shelter CPI, it shows that last month there was a very sharp reduction in hotel costs. And for some reason, hotel costs are a contributing factor to shelter. It was down 43% month over month last month, which represented the August number. So now we're looking at September's data in this month's report in October, and hotels are up 51% from the month previous. So from something that was down 43% to being up 51%, we're talking a huge swing. And now just be honest, if you believe that there is a 51% increase in the cost of hotels, if you went to a hotel, let's say a Hampton Inn or like a Holiday Inn in August, do you think the price per night would have increased 51% month over month? Come on. That's insane. That doesn't make sense. You're not going to pay $100 one night, then pay $151 the next night and be like, no one's going to say anything. People would have said something. And you gotta, these numbers, you can't trust any of the numbers coming out of this government. I mean, it seems like everything this administration is doing there's definitely some type of agenda, and you can see the agenda play out when it's in regards to not just the economic data that it puts out that's typically revised months later, but also what's happening to Elon, always being sued or being or having for example, the SpaceX licenses slow walked for whatever particular reason, from be it the Fish and Wildlife Service, be it the actual the FAA. So as Tesla shareholders, we're getting hit kind of like both sides. We got this, jobs data that comes out always messed up. We always have economic data, especially inflation, always come out messed up. And then we have things within Tesla that are always being highlighted that isn't highlighted in other car companies. We can talk about that in a different video sometime, but just look at how they treat how the media, how the government treats recalls and stuff like that. It's a totally different situation. Anyways, so let's go back to the charts, and we'll just make this quick as we can. So we drew out a triangle pattern a couple days ago, literally just a couple days ago, and this is something that we were looking for it to break out of, and it broke out of the triangle a couple days ago, and it had a really sharp bounce in the morning. It sold off under the EM. It tested again, sold off again. And then today, it kind of respected this level around 265. I mean, that's not surprising. $5 increments. First it was respecting 270. Then it's respecting 265. But the 265 triple tap essentially. Essentially it's hit it 3 times. But this was actually going to be a pretty bullish move. It wasn't making lower lows, right? It's actually making higher lows during the course of the day. And it felt like there was a potential breakout about to happen on the third touch. While it stalled out at the third touch, unfortunately, at the same exact time. So typically there's always going to be like a monthly bond auction for different types of notes and bills. And so they have like some days that's going to be like the 1 month or the 6 month or the 1 year, or today it was the 30-year long bond. And we hadn't been talking about interest rates on the bonds too much because we were happy to see them going down. But I'm going to switch over to the 30-year chart, and you can see it was just going up the entire time. Now, everything below the yellow line was fine, and this yellow line is very pivotal for this particular yield and this particular bond. So that's a 4.8%. So it actually hit it, and it sold off. And the market was pretty resilient in the face of the higher yields. But I also at the same time say the yields are telling the truth, right? So if we look at Tesla, and Tesla's going up, we can go back to Tesla. If Tesla's going up during the course of the morning into the early afternoon, and it completely sells off when the bond auction results come out, were the yields, telling the story the entire time? I mean, the people who are participating in the auction, they just don't feel really enthused to buy at these yields. They want higher yields. I mean, banks are kind of forced to. You could see a drawdown in the reverse repo. The repo is down to like $1.1 trillion, something that a couple months ago it was up to $1.8 trillion. We're talking about a liquidity injection of $700 billion. But at the same time, we know the government is issuing these notes these bills and these bonds like crazy because they want money bad. They're spending like $50 billion a day. It seems like it's out of control. And I mean, you're hearing commentary from ratings organizations looking at how the fiscal responsibility of this administration is making them question the rating again for our debt. They don't have a great outlook on debt in the United States of America. What does that do for yields? If people don't feel comfortable holding these bonds, because they get worthless in days. They become worthless in days. Look at the drawdown of TLT. This is the worst drawdown in bonds in the history of the country. In the history of the country, it's something like 50-something% over the past couple of years. The value of bonds it's just literally disappearing before your eyes. And even at this yield of 4.85%, they don't want it. They don't want it. Nobody wants our debt. Okay, so we're bitching about the debt. But anyways, so when the results came out and 18% of the bonds the dealers are stuck with, right? So now obviously they're not going to be stuck with the bonds, right? They're not going to be stuck with them. They're always going to be bought no matter what by some type of entity, government or otherwise. But at the end of the auction, 18% of those 30 years are left over, and you can see it just shot up at 1 o'clock. It just zoomed. I mean, to the point, it peaked out at an increase of yield from already being up. Like, so the day started here. This is where we started, right? This was going up with a hot inflation print. And after the results came out, it just jumped up another 1.5% in like literally minutes. We can just overlay like the S&P 500 just so you can maybe we can kind of understand, what's happening here. But you can see, how as the yields went up, and this is not something you don't necessarily want to see, right? When yields are going up and the market is slightly going up, it's not necessarily a good thing. And I always say all the time, the yields will tell you the truth. They will give you kind of the real outlook of what's happening underneath the action on equities, ETFs, or the stock, or the market in general. Because, look, the stocks are going up. Stocks are generally pretty oversold depending on some longer time frames that you pick. But when the yields are creeping up like this and the markets goes up, I think almost every time, it usually within less than a day, and today it happened the same day, but usually less than a day, it plays out to the negative. So that's something I always kind of want you to watch out for. Is like watching the 10-year, for example, is really important, and you can see the 10-year doing the same exact thing that the the is doing. But the watching yields is almost as important as watching. Some people say, watch the dollar index, the XY, watch the VIX, watch equities. Watch commodities. Those are the indicators that people look for, other tickers that people watch. But at the same time, it's yields right now is the whole conversation. It's everything. It's more important than fundamentally whatever a company reports. It doesn't really matter. Not until the yield situation improves, when the outlook on our debt improves, when there is clarity on inflation, yields are going to rule all. And shorting TLT it was so much more effective today for me than shorting the S&P 500, unless we're dealing with 0 day to expirations. I mean, a 0 day to expiration was really, really good on the S&P 500, but having that humongous move, like over 2% on the TLT dropping and it expiring tomorrow, I think my TLT puts went up something like 340%. And it's not like I want that to happen because, when it comes to our brokerage accounts in our family, we have TLT as small part of our holdings, in be it a retirement or a brokerage account. So that sucks. But at the same time, when it comes to trading, you're watching these yields, and it really makes sense that when it got to this point, it was setting up for a pivot, right? When it came to 4.8% again, this is the situation we were watching. Like, if it seems really bullish. Like, I always say it all the time, and we can use our Tesla bias to our benefit. If I showed you this chart and you can see this higher high, higher low, higher high, higher low, and going to test another level the second time, we've seen it break through other times. Okay, it broke every single level that it tested again throughout the course of the morning. If this was Tesla, you'd probably buy this moment. You probably add a couple shares. You're like, it's going to break out. We're breaking out. Like this is not a double top. We're breaking out. It's always broken every level, right? So if you can kind of look at these type of charts as if it was Tesla, would you buy it? It might help you better understand, the opposite of the trade, basically hedges and shorts that can really work in your favor. Especially, what do we call it? What do we say all the time? Thursdays are really pivotal days. It's always a setup for the next day, right? Because if you can buy a Tesla short today, and if you bought that, I bought a Tesla short. We can look at Tesla. Where did Tesla top out? Let's see. I want to say we had a couple chances at 265. So I probably bought around 264 something. And, within a couple hours, that thing went up like 120%, which is really, really good. Like Thursdays going into Fridays, there's a lot of setups for great options trading. It could be, we sold off, but maybe tomorrow we go up, and people who went long here at the close will have a really nice trade. Right. And at the same time as well, like if you went long up here and holding a short all the way to tomorrow, maybe tomorrow we sell off as well. And also, if you look at the chart, you can tell we're right in between. We're right back in between our higher and lower EM. Basically, we went nowhere. We're slightly red for the week. This is another nothing happening week. Looking at the triangle, we can see we broke out of it, and we actually When we were selling off, we actually respected the trend line from the triangle. So we're technically back in the triangle because you can see how it rejects from the top side of the triangle. Now we're really like, if you just ignore all this action from 2 days before, we're really tight in this triangle, and the move can be pretty explosive either way, right? When it gets to like, rarely do we get the opportunity to have a really nice contracted triangle right to the tip. Usually what happens is this, where you have like a couple of days of trading, it looks like it's forming a triangle, but it just breaks out early before it gets really tight. But we're tight, and honestly, at this point, the market is super bearish. What type of catalyst can you get tomorrow that's going to give you, if you're a trader or a fund manager, what do you want to hear? What do you want to see tomorrow that makes you want to go long? I don't think that much. Let's look at the S&P 500. And so the S&P 500 and actually the Tesla, like we kind of had it right. So there's a couple directions we were wanting it to go. And it was like, okay, so there's two bullish narratives, which is the gap up and bought all day. There's a gap down, which we got perfectly. Like, get this, by the way, guys, this green line, we drew this green line yesterday. I did not draw the green line today. You can watch yesterday's video for that. But it was really respecting our idea that it would be a slight gap down on a weird CPI report that gets bought up the entire day, slowly but surely. And you can see it did exactly what we thought it was going to do. Did I think it was going to sell off? No. I wasn't really thinking the market would react so violently to the bond auction. It is what it is, though. But as far as the sell, it kind of respected what the idea of what the sell would look like. It would happen. It would actually have a very sharp decrease at the middle part of the day. It would try to sustain itself and it would sell, right? It would sell in the middle part of the day. But didn't get down as low as we thought it would be, which were around 255. We're around 257 in the after hour. And I mean, there's no reason it needs to be anywhere now. Like, there's no reason it needs to be anywhere. Think about this. How many times, okay, we have earnings next Wednesday, right? How many times has Tesla stock did well after the earnings? Out of the last 3 years, maybe, not the vast majority of the time, it did very bad. The majority of the time, Tesla stock reacted negatively to earnings, and the reaction is brutal. The reaction is brutal. I mean, we just experienced it 3 months ago. We've gone nowhere. Looking at the hourly chart, we've so this is 3 months ago. We were up at $300 a share almost, just shy. We're not even close to that. And it's been 3 months. So something that's interesting that some people are looking at when it comes to Tesla's chart is another triangle. Like I'm telling you, Tesla loves to form these triangles, and this is what they're looking at. And this is how they saw price action play out over the last couple of days, is that this larger triangle is being respected, and it wants to get tight. And if you were to believe this is the triangle to watch, you would see over the course of the next 2 or 3 days a move that would look something like this, which I hope we don't see. Let's say we open down with a gap down tomorrow, because even though Tesla's selling off in the after hours, but the market is not. Okay, so this is the S&P 500. It's up. Okay, and so the sentiment on Tesla is pretty negative right now, but it would look something like that. Right, that would be the best thing we can hope for. So you have a de-risk going into next week. So when next week starts, you're less than $250, $245 a share, and that's the best case you can hope for a setup for a small gain going to earnings. But only to realize, even if you rally, if we close at the bottom of this triangle, larger triangle, by like Monday, and we're down 4 or 5%, and if we even rally. Rallying 6% will get us back to like where we were today. It's not going to be that great. But yeah, I mean, not too exciting. S&P 500, we were actually doing pretty well with our guests on the bullish side again. So it kind of follows the same type of pattern. It's just a very slow grind is what we were thinking. It would be like, it would go up in the morning, it would sell off, then grind itself up, and then bounce out. And yeah, it broke down instead. I mean, if it even went lower than what we thought it would. Honestly, I thought it would stop here, but it got a little bit of buying. There was a small trade to be had from the lows. You would have had a nice move, something like 0.6%. if you were long at that position. But looking at the S&P 500, it's actually not a horrible look. When you look at it from a bigger time frame, I mean, we didn't make a significant. I know we beat this low. I get that, but I would say beating this low, getting lower than this, that's death. That would be death. Now, we looked at last year's chart. We know last year's chart that we had a bounce of around 6% on October 2022. We bounced 4%, which is higher than the average bounce during October. Usually what happens after the bounce in October, in early October, then you see a sell-off that's greater than the gain. So it would be over 4% like maybe it's 4.5%. But that would be a move down to like the mid 14s, 400 and teens, which would be a terrible situation. But right now it's still relatively bullish. And you could, if you're looking at this, a year from now, you would say, oh, this was just healthy profit taking, and it went up a lot, and so retracing a little bit, that's normal. I mean, it retraced not even a large percentage from the lows from 420, 421 really. But yeah, so the S&P 500, it's okay still, but I wouldn't be surprised as we go into earnings seasons. Starting really tomorrow, it's going to be all the big banks. We're talking like Citibank, JP Morgan. If they don't do well, that's going to send us into a nosedive. They all report in the morning, and they report sometimes pretty early. Like it would be 7 o'clock Eastern time sometimes, that you would see just reports start trickling out randomly through the course of the day before the market opens, and we'll see how the banks are doing. You would think with high interest rates that they'd be doing okay, but we saw from previous quarters that even their net income on interest is just not great. And it's just like, you don't understand sometimes how this world works, and it's on our responsibility to do that. But so going into earnings next week and really tomorrow is just going to be some type of continuation from today, I believe, honestly. What I want to see is just Tesla just hold on and stay within this triangle somehow, some way, so that we get to this point by Monday. I hope that it would be an opportunity to really make a sharp move up and keep a really bullish structure, which is this kind of channel that you're seeing. So let's go ahead and delete the red line because it hasn't been really that consequential. We'll keep the big triangles so you can see it there. I'll keep some of our horizontals. But what I want to do is kind of show that we're in this kind of, you can say it's kind of like a channel. It's a rough channel. Let's just make it a different color for now. That we're kind of respecting this. Okay. It's not perfect, but the top edge is much more clean than the bottom. But let's say this is what we established. Okay. If we want to be bullish tomorrow, and since we're kind of at the end of the triangle, it's going to be hard to we're not going to care about where it contracts here. If it wants to go sideways, it can go sideways. But Tesla doesn't really do that. So let's start with a gap down towards the bottom side of the triangle, get back into the channel, and do something like this. And that's what I want to see on a really, really good day to just get our groove back. That move would be something like 3.86%. But to the downside, it could be pretty severe. Let's say it gaps down to the bottom side of the triangle again. Then you'll see something like, you could see like a 4% move. Flat is possible, but I don't know how to draw flat for Tesla all that well. Yeah. Sorry, guys. It wasn't so great today. And we can hope for the banks to do well. And really, it's Thursday. And typically Thursday, there's typically news when it comes to Tesla. If it's going to come out, it'll come out today or Tuesday. But as of now, making this video, I haven't heard anything yet. So that means no Cybertruck details. And we haven't seen many Cybertrucks come out of the factory in Giga Austin, Giga Texas. But they have a lot of castings. So if you want to watch Joe Techmeyer's video, he has drone flyovers on the Giga Texas factory. And yeah, you can see all the castings outside, and maybe that's going to be a future. Those are all going to be future, first deliveries for Cybertruck, but that means that they're not even close to being done. Maybe you don't see deliveries until sometime next month. All right, guys, take care. Bye.